All right, so NASDAQ, really the trend's just going up. Notice that we've tried to pierce this 20-period moving average several times. There it is there, this green line. Excuse me. We tried recently. We've not had 2 daily closes beneath the 20-period moving average. That's what will trigger this indicator that you see at the top here, these red triangles and the green triangles. These are my own indicators. I've tried to make it public on TradingView. Every time I put it up, it's my own code. It's a very simple code. They take it down. I don't know why. If some of you can give me some ideas, perhaps you could email me. I'm still looking for a social media manager. Still looking for someone to help me out in my office. If you've got time and the interest in trading and social media and uploading videos and doing things that I do, apart from trading, which if you're a trader as well, that would be great. That would be great. But so I can't figure out how to get these indicators ready for everyone else in the general public. It stays up for a day and then it gets taken down. I don't know why. But basically, this is triggered by 2 daily closes above the 20-period moving average, simple 20-period moving average, or 2 daily closes below. It's as simple as that. So we've not had a green or a red trigger for the last couple of days. Well, actually, it was still green yesterday. We did close above 2 days in a row, but we've had several piercings of it down through the 20, but not lasting more than a day. There's the 50, there's the 100, there's the 200, and various supports. I continue to think that we'll see the NASDAQ and the S&P. They've both rallied 20-something, 25. I think the NASDAQ's 27%. Let's just check since these lows. When was this? Let's go back to the beginning of this year and have a look how much the NASDAQ has rallied. And let's just take October 2023, not quite the beginning of the year, up until the high, 30.1%. We'll call it 31%, actually. 30.9%. Call it 31% rally since almost the beginning of the year, just before the end of 2023, up to where we are now. So that's a 30% rally. That's way too much. It's got to come down. We need to have a correction. It's not going to just keep on going up. We're not going to get to 40, 50, 100, 200. At some point, the market needs a healthy correction. Now's a good time. I'll tell you why, because we've got elections coming up in October. At the end of the year, we've got the campaigns starting already. We've got the VP selections. We've got interest rate deliberations by the Fed. We've got markets that are out of control, way too hot. Everything's hot. Inflation's getting hot again. GDP's been hot. Job growth has been hot. Inflation, wage rate growth has been hot. Stock markets have been hot. Bond markets have been hot. Gold, Bitcoin, you name it, it's all overheating dramatically. We need to have a bit of a calm period. But I think we're going to see some more potential strength in the stock market as the year progresses. And a lot of it, I think, has got a lot to do with politics and Jerome Powell and the Fed. But how and if there will be any political interference or not, I don't know. But if they are going to interfere and allow, or actually, rather, let me say, if they are going to take away any current interference and allow the market to pull back, to pick up some more buyers, to clean out some weak hands, to gather some strength, pick up some more liquidity, and so on. Now is a good time because we're running out of time before the end of the year, before the potential rate cut meetings by the Fed occur, and the election campaigning and that sort of thing. Now is a good time for this market to pull back, perhaps to the 100-period moving average, perhaps even to the 200-period moving average. That wouldn't be out of context. The market generally always pulls back, or the 200 catches up with the market price. The 200 is this blue-purple line, as you can see. It's often visited. It's a favorite place for the market to eventually go, but not, sometimes you can stay away from it for a long time. So let's look at the 100. That's this gray line. We visit the gray line for far more often. The red line is the 50. We visit that more often than the gray line. And so let's start with a 50. If we can just get to the 50, break down through the 20, breaking through the 20, close beneath it will trigger the algos. It happened on this occasion here, but we didn't manage to move below that swing low. And that's what prevented the algos from selling at that move. Have a look at that very closely. We closed beneath the 20, but not beneath that previous swing low. That prevented the algos from triggering this into a calamitous collapse or something like that. So that's where we go. I'm short on NASDAQ. I'm aiming for somewhere around down into these moving averages. I don't know exactly where. I'm hoping for somewhere around 15,850. I'm hoping for that. and we'll see how we go. S&P, I'm going to tell you my other positions shortly. We've got 15 minutes left on this stream. There's the rising wedge on S&P. It's pretty simple. It's a rising wedge. It's a reversal pattern. In this case, a bearish reversal pattern. We've touched the top of this wedge, and we sold yesterday. We have no other evidence that this may or may not turn around. We just got to the technical top of the wedge. It's a bearish reversal pattern. We've got an overextended market. Let's see how far the S&P has come since October. And we can do exactly the same thing. This is October 23rd, 27th of October last year. Let's see how far we got on S&P to the very high. 28.2% on S&P. So, you know, it's not going to go to 35%, 49%, 73%, 200%. It's got to come back to pick up some liquidity. Once again, I've got some lines drawn here. You can study them at your own time. You will notice that weirdly and coincidentally, these horizontal lines coincide today. They're not going to soon, because these moving averages will move up higher if the price carries on moving higher or stays higher. The moving averages will move up. But today, every one of these moving averages is precisely on these horizontal lines of support and resistance that I have drawn in. So those are the targets. You can check that out. And I don't know how far, how quickly, how low we'll go. I have no idea. We have nothing on AMD, although I do kind of, I put all the chip stocks into one basket. You got AMD, NVIDIA, Intel, the micro semiconductor chip stock, I can never remember the name. There's a whole bunch of them in one basket. And the only question here is, how long can this last? AMD seems to be showing some weakness. NVIDIA, the Mercedes-Benz of chip stocks, most of the stuff comes out of Taiwan, by the way, and that's also keeping this price quite high, because there is some political threat to Taiwan, I believe. If you can believe what politicians and wannabe politicians have to say, Taiwan is a problematic zone in the world, because 90%, 92%, I think, of all the high-end chips come out of Taiwan. And I think that's keeping, and there is some political saber rattling going on around Taiwan and China. And I think that's also contributing to these remaining high. However, there is demand. The numbers have been fantastic. There's still a lot of hype around. We're not seeing any weakness in NVIDIA. Notice the 20-period moving average. And again, these indicators, these red and green triangles on all of these charts are doing exactly the same thing. If we close twice below the 20-day simple moving average, it will trigger a red triangle at the top. And if we close twice above the 20-period moving average, daily 20 SMA, we'll get above the 20 SMA or below it. Okay, I'm getting tongue-tied now. This is a problem with live stream. If we close above it twice, we get a green arrow. If we close below it twice, we get a red arrow. And right now, we have green arrows across the board, except for AMD and Tesla and Apple. All of these other ones, the NASDAQ, S&P, AMD is now turned red, as you can see. NVIDIA firmly green. We're still above the 20 period, and Apple is below, although only one day so far, just yesterday. We have not created a red arrow on Apple, because we've only had one day below the 20 period moving average. And on Tesla, we've had loads of days. Now, my positions very briefly, and I'll have a look at the questions hereafter. We're short on NASDAQ, short on S&P right at the very top. Nothing on AMD, which is, I think, maybe forewarning that we have some weakness in stocks, in chip stocks particularly. Is this going to carry on lower? I don't know. I mean, you know, we've got to see this market coming down, and the only thing that's going to pull it down quickly and dramatically for a good solid 10, maybe 15% correction, which is all we want for this market to pick up strength and carry on, then the chip stocks are going to have to lead the way. AMD seems to be trying to do that already. So how far could we go on AMD? We could go a lot lower. We've got our order blocks and support lines below us here, all the way down to 110. We've got the 200-period moving average at 130. We've got the 100-period moving average at 150. And then this one where we are right now on the 50-day moving average, still looking weak. We had a gap down. We've closed convincingly below this 20-period moving average, and it's looking weak. So someone's asked me about NVIDIA and AMD. I think AMD may be leading the way. It's looking weak. Tesla's not, NVIDIA is not looking weak, but we shall see. Could it be free fall Friday today? Markets are trying to set up for something like that right now as we're talking. So who knows? Anything can happen. Apple, I'm long, and Tesla, I'm long. Not for any other reason. I don't think they. Apple's not looking bullish. Tesla's not looking bullish. But I've taken those long trades as a hedge against my short Nasdaq, Nvidia, S&P. So I'm short Nasdaq, S&P, Nvidia, long Apple, long Tesla. That's the one reason as a hedge. But secondly, because we've reached really low levels on these stocks. I think they're good stocks. I'm not a great electric vehicle fan myself, but that's a whole different story. In the longer term picture, I think Tesla could pick up from where we are now, certainly as long as we hold above 100, which is where I bought the last time at the bottom when everyone was selling. So can we get back to 100 and make a double bottom? Maybe. I don't know. We're at 170 now. But I'm long on Tesla, short on Nvidia, short on Nasdaq, short on S&P, also long on Apple. And Apple has been late to the AI party. Keep that in mind. We're right into this big support block here, big order block, support zone, demand zone, whatever you want to call it. The names change every year. It's fine. Just means support. We've come back down into support right now. Big support area. Apple missed out on the AI craze. I think it's going to catch up with its new kit that's coming out now. And there's also talk with Google AI to do something special. There's an antitrust case against all of that. That will blow over, as it always does, of course, or Apple will make some concessions, but they won't be too much to be worried about, I don't think.